Are you telling me that your very first seed investment was a successful exit?
If a founder cannot explain to me in real simple terms what their business is, why it exists, and how it makes money, then I really start to question, is there something really here, or are they just hoping to get lucky and maybe get bought out? I tell them, don't invest in any deal for the first 6 months, because everything is going to look amazing. Everything is going to look interesting. Once you make that choice to quit your day job and go start a company, your life changes. All of a sudden, you don't have any meetings, your phone's not ringing, you're not getting emails. It's a very quiet, a very difficult scenario for a lot of people.
Welcome to the Diligent Observer from PitchFact. I'm your host, Andrew, and every week I share insights and strategies to help angel investors make better bets. My guest today is Eric Alfuth. Eric is an investor and an advisor with over 20 years of experience. He's the managing partner currently of Caymont Ventures, which focuses on early stage VC investments, along with, at the same time, serving as a board member and advisor for emerging companies. His other day job is working as the president of the Houston Angel Network, which is one of the largest and most active angel groups in the country. Prior to launching Caymont, Eric helped launch and sell 2 energy companies, a public exit and a private sale. Before his entrepreneurial journey, Eric led a high-yield credit hedge fund and managed a $4 billion international fund for AIG Investments. He began his career as an equity research analyst with Prudential Securities for a #1 ranked institutional investor team. And Eric proudly holds 2 degrees from Texas A&M University and a master's degree from Harvard University. Eric, thank you so much for being here today.
Well, appreciate it. That's you make me sound way more interesting than I am, so appreciate that.
Well, I'm not the one that has that background. You are, sir. So I'm glad to have you. It's an honor to be with you today. So I am very excited about our conversation today. I think you bring a really interesting set of experiences. So I have 1,000 questions for you. But to start, I would love to hear just a little bit more color about how you got involved in the angel investing world in the first place.
It's been an interesting process because if you go in reverse order from my bio, started off equity research, big institutional. We work, our clients for the Fidelities of the world, the big mutual funds that you would typically hear about. And then moved into managing large portfolios. Kind of got a little bit disenfranchised because I think for me, I wanted to get more involved in the day-to-day operations of a company. So had an opportunity to transition into exactly that. Was CFO of a couple different energy companies and realized that, as much as I liked the corporate world, I still liked the finance side. And I said, well, how do I bridge all this together? So I actually it was years ago, I had a friend introduce me to a company that was looking for capital, and I had a chance to invest in them. And I was like, well, this is really interesting. It was their seed stage round. And, I followed them up and they did their A round, their B round, and ended up being relatively successful. To me, that kind of got me hooked. I love the combination.
Wait, hold on. I have to interrupt
What?
you and ask, are you telling me that your very first seed investment was a successful exit?
Well, I sold into the B round,
Okay.
but the company ultimately went bankrupt.
Okay, so it was a successful exit for you.
Yeah.
Wow. That's incredible.
Yeah,
Okay.
It's a story, I think. So it actually was a company that started off as it was a precursor for self-driving cars.
Okay.
And they were trying to test the technology. And what they found is they were actually using these little racetracks and using your phone Bluetooth interface to drive the cars around these little racetracks. It actually became one of the largest, actually one of the hottest toys on the market for that year. It actually, I think it was featured on Good Morning America and a bunch of different places. But it's a typical story of a company that grew too fast and kind of outgrew their runway. They thought the market was going to keep going. They thought the customers were going to keep buying. And eventually they built up too much inventory. Customer interest fell off and the company ended up folding.
Wow. Okay. Well, I want to come back to maybe some lessons learned from that experience.
Yeah.
It sounds like perhaps one of those takeaways is get out when things are looking up, but we'll come back to that. I interrupted you.
Yeah.
Please continue with your background and how you got plugged in.
Yeah, no. So, after that, and then when we sold our last company in 2019, I said, well, I finally have a chance to do this full time. So to me, I like the ability to work with emerging companies, work with founders, help structure how they're going to go about achieving success, and then also be investing alongside of them. There are so many founders that I've met that they have a great idea, but they don't know how to take the business from idea all the way through actual revenue generation. And I said, well, if I have a background here where I can do that. I've seen, the investing side, the finance side, the whole side of the business. So it's a great place where I can just apply all of those lessons learned.
I love it. So you've been actively full-time in the angel investment space. You've also got your venture fund, but you've been in this ecosystem full-time for about 5 years now. Is that right?
Yeah. Yeah. Wow. Yeah. That long.
Yeah. 2019.
Yeah. 5 years.
Further
Yeah.
away every day.
I know. Yeah. No, it's been fun. I mean, and what I find is exciting is there's ways to apply. Like I was actually having breakfast today with somebody, a completely unrelated industry as a nonprofit. We were trying to think about how to convey what this company does. And I said, well, this is kind of like angel investing. And all of a sudden she's like, wow, that totally makes sense. So, it's kind of neat how you can connect this industry to all kinds of different areas.
Totally. Well, and that's one of the things I love about the space. I haven't been in it as long as you, but the variety here and the constant exposure to new ideas, new innovation, even just the people that you are around, everybody seems to be very energetic, to say the least, and perhaps optimistic. So it's a fun group to be engaged with.
Yeah, I think you're right. I mean, definitely optimistic, right? Because everybody's kind of building and solving things that, look, it may or may not work, but that's why you get up in the morning, right? You're like, hey, I believe in what I'm doing. I believe in what I'm building. So I'm gonna go and do it. Because that's, I think, one of the biggest challenges that I've seen for founders is, you kind of do a little bit of the DCF on your career, right? It's like I can go get a job making X and probably over the next 5 or 10 years, I can make, here's my discounted valuation of what I can make versus if I go do a startup, my odds of success are, truthfully fairly low. And what does that mean? You end up finding the people that are doing it for the passion, for the excitement, for the interest.
Yeah. I think that I love that point. DCF, doing the DCF on your career and making a decision.
Yeah.
So I'd love if you could tell us a little bit more about your current work. So you serve in 2 capacities, one as the principal at Caymont, as well as the president at the Houston Angel Network. I'd love if you could tell us a little bit more about both of those organizations and the work that you do today.
Yeah, it's, there are differences and similarities. So, I mean, with Caymont, what we do is, we're seed through Series A investors. We're sector agnostic. So we look across multiple different companies. But we also do a lot of work with our portfolio companies. We get involved with them either, board positions or advisory positions. So our goal is to bring more than capital. And again, it's not a requirement, but it's something that we've found is very helpful for companies to go in and say, here's our background, here's what we can bring. Right now it's a solo GP process. So I have an advisory board, but I don't have any employees per se. The difference I think is with the Houston Angel Network, it's a group of a little over 100 investors. We all invest individually, but we come together collectively as a group to discuss ideas and discuss companies. And it's more about, one of the things that's interesting is managing the Houston Angel Network is more about just managing the people in the process, because it's, can you get the process right? Can you get these people from, because we get a lot of people that come in and say, look, I've never done angel investing before. I'm really curious what it is. So a lot of what we do is the educational component as well. Is, okay, we'll bring you in. Now let's kind of bring you up to speed on what angel investing is, what are term sheets, what should you look for in a deal, how should you do diligence, and really kind of be that bridge for them as they start their career into angel investing, almost from square one. And, to me, it's a little bit different. It's almost like, so what we do with our fund with, helping founders in that journey, with the Angel Network, we kind of help angels in that journey.
I love that. And I'm curious, at the Houston Angel Network, what does that mean? How do you actually do that? Because early stage investment education could look a million different ways. What does Han do to help
Yeah.
with that educational process? Like, walk me through the mechanics of how you actually go about educating a new member. Like, I come join Han next week. How do you
Yeah.
help me learn?
So we try to do a lot of educational events. Clearly we'll do speaker series. We'll bring in people from, maybe have different backgrounds. Maybe it's an accounting person, maybe it's a lawyer, or even different industry backgrounds to give our members exposure. We also have 4 industry verticals that look at different deals as they come in. And one of the things that I always do is I encourage new members, maybe they came from an energy background. I tell them, go look at, go become part of the life science vertical, go become part of the tech vertical. And the idea there is to get them exposure. So you can listen in, you can hear, you can pay attention to the diligence questions. We do a few throughout the year. We do, I think, 2 or 3 different day-long seminars. We do, and usually in the first half of the year, we do an angel one-on-one. It's kind of angel one-on-one boot camp to where it's a full day seminar, and we educate investors on basically what is angel investing, how to think about angel investing, how to look at a company, how to do basic term sheet analysis. So really, it's almost that intro to angel investing, which is very helpful. But I think the biggest thing that we do is we're very careful on screening our potential members. So our goal is we want people that can come in and be part of a collaborative environment, be people that come in and say, maybe I've done angel investing for 5 years. I want to teach other people what I'm doing. I want to convey my knowledge to other people. And that's really what we look for as we bring in new members. If we can find somebody that has that background, great. But it's also, if we find somebody that's very new to angel investing, are they open to, learning? Are they open to asking questions? One thing we also do is we pair every new member with a mentor. So as they come into the organization, we merge them with somebody that has more experience. So, when you're going through the diligence process, you see something or, something comes up and you're like, I don't understand what this is. I don't want to raise my hand in a group of 10 or 15 people. I give them somebody to go talk to about it.
I love that. Well, it sounds like a very thoughtful approach, and perhaps one of the ways that Houston Angel Network can kind of differentiates itself from other groups, because education is a huge challenge. I mean, there is a lot involved there. So I can appreciate
I will say,
the effort.
and it's interesting because when I joined the Houston Angel Network, it was probably right around 5 or 6 years ago. And it was very different then. So we really worked hard to make it a very open network. I remember the first meeting I went to was, it's like everybody kind of was sitting at their table and they were all their own little table cliques. And it was just, it was hard to break into it, right? And that's, you'll see that, I think, in a lot of different organizations. But our goal was to make it as open and inviting as we can.
Love it. Love it. Well, I'd love to ask you a few more questions about something that I think you're uniquely positioned to chat about, and that is the topic for today, specifically this concept of developing kind of a macro thesis and then taking that thesis to the micro and finding particular opportunities that support that. You've clearly had to do this as part of your work at Caymont, as well as you educate angels, make your own individual angel investments. You've been doing this for several years now. And so I'd love to just kind of open the floor for how you think about maybe why that is an important thing to do, as opposed to just following any deal that comes along. As you and I prepped for today, this was a key topic that you wanted to speak into. So I'd love to hear, maybe as a starting point, why is it important in your perspective to develop a macro perspective?
Mm-hmm. No, and I think one of the things, I started my career in the public markets, and one of the things I was always, as with any public markets, you're kind of on this 3-month time horizon. It's, you jump from Q1 earnings to Q2 earnings to Q3 earnings, and that's your horizon. That's where a lot of investors invest. I mean, you look at, the average hold time per stocks are usually less than 12 months for a lot of these big institutions. So for me, when I got into angel investing, I was like, these are long-term investments. They don't have that liquidity. I can't invest in a company today and 6 months later say, okay, I'm done, I'm out. You got to look long-term. And to me, that's one of the reasons why we look for the thesis. And the other reason is, it's you can find. I think it also helps in our deal screening because you can get a pipeline of deals. Like we see deals all the time, but you have to have some underlying foundational thesis to say, why do I like this deal? It could be a deal that looks really good on paper, but then you got to think through, okay, where is this going to be in 3 to 5 years? What's going to change in the macro environment that either makes this company super successful or is going to really, not allow this company to continue? And I think we've seen a lot of that, recently, right? You can even go back and say, an AI company, like, artificial intelligence, it's been around technically since the 50s, all right? But, in the 60s and 70s, if you invested in an AI company, great. Well, the technology wasn't there yet. Today the technology's there. So, that's what we look for. And what we also look for too is, I like to do a lot of reading and a lot of research, and I'm always thinking like, where's the inflection point of an industry? And this is something that we tell our investors is we like to find companies building at the inflection point of an industry. All right. So it's what's that key problem an industry is facing, and can we go find a company that may be trying to solve that?
I think this is really interesting because it touches on the team versus market debate. I mean, the classic conversation, right? Are you investing in betting on the team or are you betting on the market? It sounds to me like perhaps this concept, at least in your view, perhaps you would fall more on the market side, not devaluing the importance of the team, but if you had to pick between the two, would you say that that's true, or would you say they're balanced in your perspective?
I would probably lean toward the team.
Really? Okay.
Because I think the key is it's a long-term concept. So if we can kind of get the general idea of, we like this industry, we like this concept, and this team is building at that concept. But if for whatever reason that particular concept doesn't work, right, that solution doesn't work, I want to make sure I have a team that I'm backing that can pivot and then say, okay, where else can we find a way to apply this? What else can we do here to really kind of use the capital that we've raised to go and be successful?
So if there was let's say you got introduced to an entrepreneur that was working in a space that you didn't know anything about. You really liked the person, everything else about the deal was amazing, but you didn't have a particularly strong belief about the market or awareness of that market. How would you evaluate that deal, or would you even look at that deal?
I would ask that founder, that entrepreneur, explain to me your business and how you make money, and make sure I understand it. Because that's one thing I found is when I go into an industry that, like, so, you take like some of the life science stuff or some of the real esoteric industries, like edge computing and stuff like that, where, you can kind of go down the rabbit hole of companies and you're like, wow, I didn't even know that existed. But if a founder cannot explain to me in real simple terms what their business is, why it exists, and how it makes money, then I really start to question, is there something really here, or are they just hoping to get lucky and maybe get bought out? I've had so many conversations with founders where they jump right into, here's my product and here's why it's amazing. And I'm like, well, let's back up here. Like, what makes your product amazing? What is your market you're going after? And the other side of that too is, I've got to make sure that, as the company grows up, can they continue to raise money? Angels are great because a lot of angels will invest in a very specific niche vertical that's their background. But as you get bigger, you start going to VCs, you're raising your C series or D series. Those are more generalist funds. So, can you really build and explain that business?
Interesting. So it sounds like you're open to considering markets and perhaps developing a thesis based on a super compelling team.
Oh yeah. Like I did, like I think it was 2 years ago, I did a life science deal, and, I'm not a life science expert in any way, but the company could explain in very simple terms what they were doing, why they were doing it, And they also had a thesis on how they're going to make money before they got FDA approval. And I was like, wow, that's really impressive that they've thought through all these steps in this.
That's interesting. I think one of the challenges I hear a lot of angels discuss is when there's a very compelling presenter, right? It's a good salesman. He's able to clearly communicate all those things, has a pretty well thought out plan, seems amazing, but it's not a space that they understand particularly well. What advice would you have for angels evaluating those kinds of opportunities? Because I think being informed by the entrepreneur is important, and learning about a market is important, but there's also, as I'm sure you've seen, it's important to make sure that you understand the market independent from what the entrepreneur is telling you, because they are incentivized more than anybody to raise capital. They believe in this thing, right? They're betting their career in a lot of ways on whatever it is that they're working on. Talk through how you think about kind of that dance of being open to learning from an entrepreneur, but putting a line in the sand and doing your own analysis on a market.
Yeah, and I think that's very important, because I think that's one of the challenges with early angel investors, is that whole fear of missing out. I've watched so many pitches where you see a founder that is, like you said, like a really good salesperson, right? Like they could probably come and pitch any company that you give them and make it sound phenomenal. So I think part of it is, it kind of goes back to a little bit of it's, I'm always skeptical when I meet companies. I'm always looking for, what's going to derail this company, what's going to go wrong with this company. But it also helps to have, and this is one thing I've always tried in my career, is to build a really good base of contacts outside of, my core industries that I grew up in. I love meeting people in different industries, and I love asking them all kinds of questions about what they do, how they look at stuff, because that way I know when I come to them with a deal, they can give me, hey, here's what we think of this. A good example is, several years ago, I had a deal in the defense industry, and this was a company very, very well sold. I mean, they were featured in the Wall Street Journal, CNBC. They were touted as like the next best thing. So a couple of people that are on my advisory board are Navy SEALs. So I went to them and I said, hey, what do you guys think of this? And they're like, oh, that's disaster. Like, that'll never work. I was like, wow, okay. So it kind of gave me a different perspective to go back and reevaluate it from a different lens. And when I put that perspective on it, I was like, okay, now I see that there's 3 to 4 things that really have to line up for this company to make it. Yeah, the founder's a great salesperson, but they got a couple hurdles they got to make. And ironically, they're still stuck in kind of this, they can't quite launch yet. They're still struggling to get launched. So that's a great example of why I think it's important for angels to have a broad network and be willing to go to, you go to your network and say, hey, I'm looking at this deal. What do you think of it? Or to be able to go to somebody and say, hey, I like this deal. Give me your feedback, and be able to hear somebody tell you, no, this is probably not a great idea. It's to be able to change your perspective on stuff like that, and to realize, okay, I don't know everything. I'm going to other people and I'm looking for their feedback as well.
I'd love to hear, for maybe a newer angel that's trying to develop a thesis for themselves for the first time, I'd love to hear what questions you would ask them, or how you would advise a newer angel to go about starting the process of building out their own personal thesis.
Yeah, it's, one of the things I tell some of our early members, when somebody joins the Houston Angel Network and hasn't done angel investing before, I tell them, don't invest in any deal for the first 6 months. Because everything is going to look amazing. Everything is going to look interesting. Take the time to listen to the pitches, listen to founders, talk to founders, listen to the diligence questions, expose yourself to the ecosystem. Because I guarantee you, if you go back after 6 months and you look at the deals that you thought were good, they might not be as great as you thought they were. So, take that time, do those reps, listen to the conversations, listen to what other people are asking, because there's so many things that like we talked about before, I mean, every founder is going to make their company sound amazing. You have 5 to 10 minutes to present your company. Of course, it's going to sound like the greatest thing ever, right? So that's one of the big things that I always tell people. The second one is if it's a consumer facing product or even a B2B company, would you or the company you work for actually buy this product or service? I've seen that a lot too. We've seen service companies come through, and when you think about it, you're like, well, this sounds really great, but I don't know if I'd ever use that. Well, okay, well, listen to that. And then the third thing I'd tell new angels is, just make sure you really understand how a company makes money. Again, that kind of goes back to, do you understand the core thesis of the business? And is that sustainable? Can you go and could you go and tell your friend, here's why I invested in this company, here's how they make money, here's why I think they're going to be successful. And if you can't conceptualize that, then you really got to think about, why am I investing in this?
Could you give an example of maybe one or two broad beliefs or theses that you hold that have directly driven investment decisions? As much or as little detail as you like, but I'd love if you could just give a couple of examples for a thesis you've built out based on your analysis of the market that has led to one or more deals.
Yeah, so an interesting one is years ago I invested in a company, and they were kind of a B2C logistics company, and they solved a problem that in the back of my mind I always had. So they were kind of an apartment logistics company, and they would help, when you move into a new apartment. My big thing with apartments was I could never, move into an apartment. You're like, how do I find the right dry cleaners, dog walkers, pet sitters? It's tough because you're in a new city and you don't know anybody. And I was like, there's got to be a better way to do this. Like, why does the leasing agency or leasing office not understand this? And this company came along, and they solved the problem. They had the solution to the problem. I had people that I talked to, and I asked them about this, and they said, no, that'll never work because you're going to be charging the residents a monthly fee for this. They're going to argue they don't like it, or, it's just another thing for the leasing people to manage. And I said, okay, I get that, but this is also a problem that personally I've yet to see a solution for. So that was one where I kind of went with it's solving a problem that I saw in the market. It's solving a problem that I really had. And, so far they've been really successful. I think they just raised their B round, about a year ago. Another one was a company that we invested in, and it was a thesis-driven company. It was in the sports tech world, and it was our play on the whole college athletes getting paid. And it's normally our fund, we typically invest in, more software-driven companies. We don't do, for us to do consumer stuff is pretty rare, but this company was making a carbon fiber insole. And our thesis was, as these athletes start to get paid for stuff, well, they still have to wear the brand that their team specifies, right? Because a lot of brands will say, look, we only wear Reebok shoes, or we only have Nike shoes, whatever, right? So they can't change the outside of it, but what they can change is the inside of it. So that was our thesis: is these athletes, as they go forward, are going to want something that they can modify. And it's become, again, that company, they did, I think they tripled their revenue in about 2 years now.
Wow.
So it's just completely taken off. But again, it was the whole NIL thing is really what pushed them over the edge. And to me, that's kind of taking multiple different perspectives on something and saying, okay, how do we bring this back to a thesis that's a potential investment opportunity?
Very interesting. So it sounds like there was a couple approaches here that you just talked about. The first one was more of a problem-driven investment, where you recognized, okay, this is a real problem. I've personally experienced it. I understand this well because of my personal experience. And so therefore I'm comfortable making this bet. The second one was a little bit different in that you kind of were watching this macro trend around NIL changes and thinking about, okay, what are the implications here? How do we, what opportunities are there to play into this thing that's already happening, and this particular company fit really well with that belief that you developed independently.
Yeah. So I mean, and I think that's, that's to me, it kind of goes back to the whole the idea of like, as an angel, as a VC, you really want to build, where's your thesis, right? So then when you see companies, once you have that long-term thesis or idea of where you think an industry or is going to go, then you kind of bounce those companies off that thesis, right? To say, okay, this company may look really exciting and really interesting. Does it fit with kind of where we think things are going?
I'm curious what some of the trends or industries that you're watching currently are.
Oh man, you're gonna let us disclose our secret ideas.
Maybe just give me one. Give me one thing that you're watching, and it can't be AI.
No, well, so I think you're seeing a lot of different things. I think for us, like the life science space, you're starting to see a lot more personalized medicine. Years ago, there was a company that I was working with, and they were doing actually genetic prototyping for pain meds. And so that when a patient would come into the hospital for, if they had, maybe like a cancer patient or somebody that needed pain medication over a longer period of time, they could tailor that to that individual person. And, that was a technology that actually came out of mapping transplants. So they kind of took that concept and applied it to a different one. Energy space, I think, is going to be very interesting, as we see, the whole idea of the whole, small modular nuclear reactors becoming a thing. And, I don't want to, you said don't touch on AI, but I think it's interesting because the demand for AI data centers is going to likely drive the need for small modular reactors. Can we put a small nuclear facility, back of a semi truck, right, into a data center, power that data center? Over time, people become more comfortable with the idea of, oh, wait, I'm living next to a nuclear reactor. Oh, it didn't blow up. It didn't melt down. Does that then push out that industry? We're looking at a lot of stuff in the educational
I'll allow
tech
that one
space right now.
since it was ancillary.
Yeah, I mean, like, like educational tech, right? It's like, how do you shift from, teachers teaching a class of 30 to kind of reversing it, right? So the students are kind of running at their own pace. Like another one, like fintech, that's a big one for us that we're looking at right now is, all the different things with contracts and banking, blockchain works really well for that. So why can't you take, I came out of oil and gas, right? So every time we would lease acreage, we had to send somebody down to the courthouse. They had to dig through the records. They had to photocopy them. They had to bring them back to the office. You could just put that on blockchain. You could have it audited, easily transferable and verifiable. It's stuff like that. I think the challenge that we're going to face, one of the things that I keep seeing with the kind of the downside of AI, if you want to go back to that a little bit, is in literary tech. I think that's going to be a big challenge of how do you take, a written word and say, was this human created or was this AI created? And there's a lot of discussion on that right now. Even that, you kind of go into like cybersecurity, right? There's so much discussion now on how do I know you're you? Like, how do I know I'm sitting here talking to Andrew? Like you could be an AI generated algorithm right now, so it's how do we verify that? How do we protect people? So I think there's a lot of interesting things happening for us. We kind of build these concepts. So then when we see a company, we can say, okay, that company has the potential to make that inflection point in an industry because of what they're doing.
Super interesting. So as kind of I'll use the word generalist investor, given that you're interested in a variety of different industries, how do you, maybe from a Caymont perspective, go about analyzing an opportunity? Once you've said, okay, this aligns with the general thesis, I'm interested, let's have a conversation. You've gotten to know the entrepreneur a little bit, seen their data room. What are the like last few boxes that you tend to find yourself checking from like a risk standpoint? Obviously, as a GP, you have a different obligation than a lot of angels do. But I'm curious, kind of what does that last few steps of diligence look like for you?
Yeah, I think some of the last things that we really look at is, so assuming all the data room checks out, one of the things that we really focus on is is the team and the transition. One of my questions that I love to ask founders is really two questions. Is first of all, who tells you no in your day-to-day job? So who's on your advisory board, and do they have the power to stand up and say, look, this is not a great idea? And the second thing is, I love to ask founders, okay, tell me when you think it's going to be time for you to step aside and bring in a CEO that can continue to manage this company to the next level. Because those become some of the biggest arguments that investors can have with their founders. Because it's tough to let go. You develop something from day one, and it's your baby, right? It's like you don't want to give it up. But at some point you have to step aside, because your skill set is great, because you can take a product from concept all the way through, MVP, but that doesn't mean you can take a company from, $1 of revenue to $100 million of revenue. Totally different skill sets.
That's really, really interesting. I'm curious, is that board oversight question related to or inspired at all by the OpenAI events of last year? I think that was last year, right? When the board kind of imploded and there was all this attention on early stage board structures. Has that always been a key question for you, or has that evolved over the last couple of years?
No, that's always actually been way before that, actually.
Okay, so you were ahead of the curve then.
Well, so, actually, so I came to that question actually about 20 years ago. So when I was doing equity research, we had I guess one of our claim to fame is we had one of the first sell ratings on Enron stock. And one of the things that always really surprised me was you had this group of executives running Enron. And then you had this board that was, the who's who of, defense and government and everything, right? A really well structured board, names that everybody would recognize. How did this disconnect happen? And, to me, I realized that the executives were basically running unchecked. Like, the board didn't tell them no. Like, the board never asked the hard questions. The board never held them really accountable. And to me, I was like, wow, that is very important. I think you saw that, you kind of carry that through, right? Like all the big disasters, like Theranos, right? Like Theranos had a board, but there was not a single biotech person on that board. It's like, well, okay, well, of course they're not going to say, wait a minute, this is a bad idea, or you shouldn't be doing this, or why are you doing this? So to me, it's always been a very powerful question, I think, because you have to have that check and balance, because you have a leadership team that sometimes can get so in the weeds of their company, and they start to think what they're doing is the right thing. And it's hard for them sometimes to separate that and say, okay, what's 30,000 foot level perspective on this? Are we really doing what's the benefit of the investors or the shareholders? So yeah, so that question actually goes back quite far, but it's, you bring up great examples. I mean, it's served me well many times, and I've gotten a lot of founders that will either give me like a dirty look or a double take when I ask that question of them, kind of who tells you no. And that also gives me a great perspective on who they are.
Sure.
Because, I've met founders that say, well, nobody tells me no. Like I'm my own boss. That's why I quit corporate world to come do my own thing. And so it's a very powerful question.
Yeah. I love that. And I think it's interesting even to ask that as early as the seed stage and Series A, when these companies are really young, seeing kind of their initial openness to that oversight, I think is, to your point, very telling of their capacity to scale. At what stage do you expect an entrepreneur to have some kind of a board in place? Like, I go start a company next week, and then I go start to try and get a little bit of traction. Like, should I be worrying about a board at that point, or is that a later thing? Like, at what point are you expecting there to be a robust management structure in place?
I think if you're out raising, your seed round where you're talking to true third parties, people that you might not know, you should have an advisory board in place. You should have some type of a board that, as a founder, it's somebody holding you accountable, but it's also, for the investors, they should want somebody holding that founder accountable. They should want somebody, but it's not even accountability. It's providing that founder the resources where they can go to somebody and say, hey, I got a question here. I'm running into challenges here. I'm burnt out here. What do I do? It's that whole range, right? It's like, it's your support system. And I think, with then that's something that I always tell people that say, hey, I want to go start a company. Maybe you worked in a big corporation for 20 years, right? And you really want to go do your own thing. And I think what's very important for founders to realize is once you make that choice to quit your day job and go start a company, your life changes. All of a sudden, you don't have any meetings, your phone's not ringing, you're not getting emails. It's a very quiet, a very difficult scenario for a lot of people. And I think that's why a lot of people try to do that and fail, because they don't realize all of a sudden you don't have a support network around you. You got to go find that support network. You have nobody structuring your day. It's hard. It's hard to do that. So, I think that's important for founders to, as early as you can, go build that advisory board. Surround yourself with the people that can be that support network for you.
I love that. I think that's a really powerful diligence question, right, for angels to consider. That's not one that I hear often talked about, right? People look at the team and they'll say, oh, who's the team? I really focus on the team, but not always does that flow all the way down to who's on their advisory board, and then who are their like actual structural leadership. Like, what is the actual structure of the company? That doesn't always make it into the angels' limited diligence. So I think that's a really interesting point. Eric, I have one last question for you. But before I get to that, anything that we haven't covered or talked about today that you feel would be of interest to our audience based on your experience?
I think we've definitely covered a lot. I mean, I think, angel investing it's a really exciting place. You're getting the chance to invest in the future. You're getting the chance to fund the future of our economy, the future of what's going to happen. And, as much as people say, you hear all these dire statistics, like 1 in 10 angel investments make money. At some point you got to think about, well, yes, but also it gives you a chance to become part of this ecosystem where you are helping people build this future. So maybe the founder that you back, maybe you lose all your money on that deal, but maybe the chance that you can go in and you can mentor that person and they can then go on to find another company, you just never know where it's going to go. And I will say, for angels, I would tell people it's more than just the money. The 25 or 50 grand you're going to put into a company is helpful, but, take time to offer that founder your advice. Say, hey, here's my phone number. Call me, text me, reach out to me if you have problems. I'm here for you. And check in with that founder. That's one thing I found is very important is, as angels, I'll have founders that we fund them and they're heads down. They're just working on their company. And I'll every couple of months, I just reach out and hey, how's it going? How's it going? I haven't heard from you. How's it going? And, to me, that's a big thing that angels, I think, need to be very cognizant of really being supportive of their founders, of reaching out. Because a lot of times, founders they don't want to reach out to the angels because they're worried that, well, I don't want to bother my investors. I don't want to look like I'm weak. I don't want to look like I don't know what I'm doing. Angels are there for you. Now, once you get to like your, B round, C round, then maybe you have to be a little careful of that. But angels are there. I mean, there's a reason they call them angels. There's a reason that term is there, because it's capital, but it's also support. It's capital, but it's that network that they bring to you. So, make sure it's always a two-way street.
I love that. And I think you're hitting on what makes the angel investing community really unique. And that is this collaborative element, right? As soon as you write a check, you turn around and become that entrepreneur's biggest advocate. And there's this community kind of sharing. You even mentioned it earlier, going to your friends and getting input from others, right? That is super fundamental to being an effective angel investor. So I love that point. My last question for you, Eric, is how can our audience stay connected with you? I think you have a pretty interesting resource to point us towards, but how can we stay connected to you?
Yeah, so I do, for the past couple of years, I've been writing on Substack. So it's, I think it's Caymont.substack.com. The goal there was, I started probably 2 to 3 years ago, just writing about lessons learned, either as an angel, as an investor, or as somebody that's mentoring startup companies. And, it's stuff like, hey, what are the challenges that I've seen founders encounter? We've also looked at a few, places where angel or people may have invested in companies, what they miss. We kind of try to cover a lot of variety. We try to keep it interesting. Also very active on LinkedIn as well, so you hit me up there. And then, always open to people willing to email me. I try to respond to as many as I can. I try to be as helpful as I can as well.
Love it. Well, Eric, thank you so much for your time today. This has been a true pleasure. Very appreciative of the time and attention, and look forward to sharing this. Enjoy the rest of your day, and we'll talk soon.
Yeah.